We just got new housing market data which says that the housing market was frozen in August 2024. What does that mean? It means in August, we saw home sales fall to the lowest levels we have seen in decades. Now, I already know what you're thinking, but Jaspreet, August, that's old news. How does this apply to today? Because things are shifting and they're beginning to shift fast. With mortgage rates falling, you have bankers and realtors and home sellers hoping that home sales will jump and maybe home prices will go up too. That's why today I want to go over what's happening with the housing market right now and how we are seeing the housing market shift. But first, here are a few words from my sponsor, Rocket Money. If you're looking for a simple way to find some extra money to maybe buy a home, Rocket Money is the best tool that I have found to help you manage your money because they can do two things. First, they can help you find subscriptions that you're not using because if you just push a button, they'll give you a list of all your recurring charges. But they really do a whole lot more than that because when I entered my information into Rocket Money, they gave me a list of all of my subscriptions and then they told me that it looks like my AT&T bill was high. So I got interested. I clicked a few buttons and then they said that they can help to negotiate my AT&T bill lower if I just push 2 more buttons, and so now they're doing that for me. And they also make canceling subscriptions super easy. Like my wife signed up for a meal service subscription a long time ago. It was on an irregular payment system, so it wasn't every month, which is why we weren't seeing it regularly, but we stopped using it. And so then I was able to push 2 buttons on Rocket Money and they canceled it for me. And secondly, Rocket Money can help you manage your money. So I synced Rocket Money with my bank accounts and my stock brokerage accounts. So it gives me a snapshot of my spending, but also my investments. So it gives you a visual display of what your net worth is. So if you're ready to take control of your finances with Rocket Money, you can go to rocketmoney.com/minority-mindset, or you can use my link down in the description below. That way they know that I sent you. So let's start with the data. Redfin published a report saying that in August 2024, housing sales fell to the lowest numbers that we have seen since 2012, minus a small period during the pandemic when the economy was shut down. Now, to understand how the housing market is shifting today, we have to understand why the housing market was so frozen in August. Take a look. There's no sense of urgency. Buyers are selective right now, especially if they have a house already. They're looking for the perfect home at the right price. So in August, when mortgage rates were higher, we saw the housing market frozen because number one, sellers didn't want to sell. They were looking for the perfect home, and buyers didn't want to pay the high prices and the higher mortgage rates. But now we're starting to look like things are shifting. For one, the Federal Reserve Bank has begun cutting interest rates, and with that, mortgage rates have fallen. Now again, we're not going to know the full impact of this until a little bit later, but Goldman Sachs put out a report on their website where they're now predicting that home prices are going to rally in 2025 again. Why? Because of lower mortgage rates. Lower mortgage rates obviously entice more buyers to want to go out and buy a home because they feel like they're getting a cheaper mortgage, but they can also entice more sellers to sell their homes because if you're thinking about buying a new home and you have a 5% mortgage, you don't want to jump up to an 8% mortgage, you feel more comfortable going to a 6% mortgage instead. Now, of course, nobody can predict the future, but one of the things that we can do to help give us an idea of what might be coming is to take a look at different housing markets. For example, in the United Kingdom, they began cutting interest rates a little bit before us, and what we saw happen in the United Kingdom is that housing prices in September shot up at the fastest rate that they have seen since the end of the pandemic. Again, here's what mortgage rates matter. If you were to borrow $500,000 to buy this house, at an 8% mortgage, it's going to cost you $3,669 a month. But if you can borrow the same $500,000 at 6%, now it's going to cost you $2,998 a month to buy that same home because you're borrowing the same amount of dollars at a lower mortgage rate, which means you would save ultimately around $8,000 a year just by getting the same amount of dollars at a lower mortgage rate. But then the question is, well, if mortgage rates fall, does that mean that you're going to have to borrow more dollars because home prices might go up? So let's take a look at that. Let's assume that you have a monthly budget where you can afford a mortgage of up to $3,669 a month, and now mortgage rates have fallen to 6%. Well, how much money can you potentially pay? At a 6% mortgage, you could borrow $612,000 to have the same monthly payment, which means you could potentially pay up to 22% more. You could potentially borrow 22% more dollars to have the same mortgage payment at 8% that you would at 6%. Which then goes back to the same question that everybody keeps asking. What's going to happen with housing prices? At the end of the day, a house is worth what somebody else is willing to pay for it. And what somebody else is willing to pay is ultimately going to depend on supply and demand. Now, certain things like mortgage rates can impact demand, which can also impact supply, but we have to look at this from a holistic standpoint. There are three main factors that can impact supply. Number one are voluntary sales, number two are construction, and number three are involuntary sales. I've already kind of hinted at voluntary sales, which is as mortgage rates fall, people who have lower mortgage rates locked in are more likely to sell because they don't feel as bad jumping to a higher mortgage. But what about construction? Take a look at this Reuters article. This was published on September 18th, and the title is U.S. Single-Family Home Building Surges. So we're starting to see more home builders get more confident in building, which can help increase supply. But remember, building a home doesn't happen overnight. It could take months, it could take a year, it could take 18 months. So that's something that's going to take time to really implement. But the third part of supply is involuntary sales, which include foreclosures, which are not really a thing right now. Now, if you look at the data, you hear people talking about how foreclosures are skyrocketing, but the reason why they're saying that is because foreclosures are a lot higher today than what we were during the pandemic when foreclosures were not allowed. But if you look historically, the amount of foreclosures that we're seeing today are still historically very low. And the reason why is because home prices have gone up so much. So even if you can't make your housing payments anymore because you lost your job, well, chances are you have some equity in your home. And if you have some equity in your home, you could just sell your home, walk away with some cash, and not have to worry about a foreclosure. So that's why we're not really seeing foreclosures or involuntary sales like that at the moment. Are they happening? Sure, but it's not really anything that's that significant. The second factor that you want to pay attention to is demand. Now again, I've touched on demand through mortgage rates already in this video. Lower mortgage rates can increase demand. But the second factor that can also influence demand is the economy. Because if people are worried about the economy, they're worried about their job, they're less likely to go out and make a big purchase like a home. But if people are confident in the economy, they see asset values rising, and they feel confident in their ability to keep their job, then they're more likely to go out and buy a home, and that can increase demand. And this is where you want to pay attention to what the Federal Reserve Bank is saying as well. The Federal Reserve Bank is working to lower interest rates as a way to stimulate the economy, but they also don't want to make the inflation problem worse. Now you got to wonder, if you're cutting interest rates, and mortgage rates get cheaper, couldn't that make home prices higher, which make the inflation problem worse? And this is where the Federal Reserve Bank has addressed this. Now, Jerome Powell, who's the chairman of the Federal Reserve Bank, has said that he's anticipating smaller interest rate cuts in the future, but he's also talked about how he's not worried about home prices becoming an issue on inflation anymore. He says the housing services inflation continues to decline, but sluggishly. The growth rate in rents charged to new tenants remains low, and as long as that remains the case, housing services inflation will continue to decline. Broader economic conditions also set the table for further disinflation. So what does that mean? Well, we know supply and demand impact housing prices. When you have more demand than supply, that can then push home prices higher because you have more buyers fighting against each other to buy a home. And what Jerome Powell says is that when you cut mortgage rates, that then increases demand, which can then help push home prices higher and make the inflation problem worse. But what Jerome Powell is saying, and the Federal Reserve Bank is saying, that this is expected to be balanced out by a slowdown in the economy, which could help cool down demand. And this is why Jerome Powell believes that cutting mortgage rates will not make the inflation problem worse. Cutting mortgage rates can increase demand, but that increase in demand can be balanced out by a cooler economy. And this then will keep demand even and level with supply, which can then keep housing prices at bay and not cause housing prices to shoot up even more. This is what the Federal Reserve Bank is saying. What is going to happen? I don't know. Everybody has an opinion. I'm not here to make financial opinions because financial opinions are like armpits. Everybody's got a couple and some stink more than others. Now, do I think that lower interest rates could make the inflation problem worse? Absolutely. But of course, only time will tell. What I want you to do is understand the different factors that are impacting the economy and the housing market. That way you can make smarter decisions. And if you're thinking about buying a home, the biggest thing you have to understand is, can you afford the home? Stop trying to time the market. Stop trying to make the perfect decision in terms of how you can make the most money off of your home, because you're buying a home to live in, to make memories. You're not buying this home to make money. If you were, buy a rental property instead. When you're buying an investment property, you're going to have a completely different financial analysis. But when you're buying a house for you and your family, you're buying it to make memories, so make sure you can buy what you can afford. And that's why the most important thing for you is to make sure you can afford the monthly payments, make sure you can afford the move-in costs, and make sure you can afford the down payment. And if you can do that, and you can continue investing your money, Great. Don't worry about everything else happening in the economy. Buy your home, buy what you can afford, and stop worrying about everything else. We just entered the next phase of the global economy. The Federal Reserve Bank is now cutting interest rates. Canada is cutting interest rates. China is now cutting rates, and countries across Europe are also cutting interest rates. And we've also seen some countries, on the other hand, now start to protect themselves against any sort of potential economic uncertainty by buying things like